What's up, traders? Welcome back. I'm Kenya with BK Forex Academy, and in today's training, we're talking about 4 tips to know before you take your next scalp trade. Let's go ahead and hop right in. Everything that I share with you is based on my personal experience and what I have been able to achieve over the years. It doesn't mean that you have to do exactly what I do, but what I recommend is that when you find a mentor or someone who you see is successful in trading, do your best to duplicate their results. And if it fits your personality and your style of trading, you should be able to duplicate that success and also, or maybe take something from it and make it your own. So hopping into GBP JPY on the daily, here is tip number 1 for my scalpers out there. Always consider the larger time frame. When I am going into the market to do scalping, I always consider the larger time frame first. So sometimes I will even go out to the weekly or the monthly so I can get an overall picture of what's going on in the market. Let's take a look at GBP JPY, for example. You can see on the daily, if I were to ask you, what is this trend in right now? What would you say? Is it up, down, or is it sideways, right? So one of the things that I always like to do is define the market direction. Is this market making higher highs? Is it making higher lows, higher highs and higher lows, which is in an uptrend? Or is it making lower highs and lower lows? Or is it too complicated for me to even define it? If I can define it and if it's too complicated, I move on, or I wait until that price action becomes more clear. Let's go out to the monthly, and what you'll see on this monthly is that we're clearly in an uptrend. Look how long that price has been going up. So price is making higher highs and higher lows. On the monthly, you can also see that this is our monthly high. And we also have been given a monthly low. So that's our monthly low that's acting as support. If we move down to the weekly, you can see that price looks like it's more of a range on the weekly, right? But we have been in an uptrend and we failed to make new highs in this area here. So what price level is that? We failed to make new highs at around 168.38. So we saw the price decline. The market started to give us a decline. If we move down to the daily, now you can see we're still sort of ranging on the daily, right? But it does look like it could be going into a downtrend somewhat, but we are still somewhat in that range. So what you have to ask yourself is, based on what you're seeing right now, what are you comfortable trading? Now, if I simply just grab my trend line, I can do this as well. So I like to have a high that I connect this to. That is the first high. So this could be the start of a market turnaround, possibly, but until we break this support and until we break these highs that we saw on the higher time frame, then basically price can move up in between these two, the range area. So considering that, I'm going to always define my direction. Do I want to be short in this market or do I want to be long? And that's what I advise you to ask yourself. After that, you're going to find your key levels. I am always focused on where's the best deal. If it's a great deal, then I'll want in. If it's not a great deal, I'll wait. So I'm asking myself, based on what I'm seeing, am I getting this at a great price? And how can I play defense just in case I'm wrong? So for example, let's go ahead and find our key levels. So this is where current price is right now. So we can see it's at 161.89. And before we had this wick rejection, you can see right here that this was a previous area of support. Look how much the market went up. So right there. And we can also just kind of bring this out a little bit. And you can see that that was also an area of strong resistance, right? So I like to use a rectangle because I like to draw an area. So something like this. So this would be our resistance / support. I want to preferably find an area where it was strong support and also resistance. So what I'll tell myself is that, okay, I also see something else. I see a bearish engulfing candle here. So we could continue to see more decline on GBP JPY. Also, you have to pay attention to fundamentals as well, because fundamentals could change your trade. Anything can go wrong. So always know what's going on with high impact news and plan your trade from there. Once you have your directional bias and you also have your level, so you know where you're getting a good deal or where you want to execute the trade, you then want to move down to the lower time frame after you set the alert. So once you get it, and you then want to have confirmation. So that is your third tip, confirmation. You need to have confirmation. What are the 3 or 4 confirmations that you're going to look for each time to get into the trade? Often what I see a lot of traders do is they're doing too many different things. They're doing one thing and then they're doing it different, and then they're doing another way, or they're doing way too many strategies. And then before you know it, they have tons of losses. They're confused or they're stuck and they don't know how to rebound. So I recommend that you find a system and that you stick with a high proven system that has been proven to be consistently profitable. Learn it and master that system and stick with the rules based strategy that it offers. So, what are the 3, 4 things of why you get into a trade? So, for example, if this is the level that we're going to trade, let's say we move down to the 15-minute time frame once the price gets there. And then we find our entry reason. So what is our entry reason going to be? Well, it could be a breakout. It could be that price is at a major level of support. It could be a particular pattern that we look for. It could be a trend line break. So something like this, let's say you have a trend line break. You could even use a moving average. Some of my favorite indicators to use, even though I'm not a big indicator trader, there are 4 reliable indicators I like to use with scalping because I've made so much money with it over the years and it just proves to work. And that is the Bollinger Band. So got a lot of you know about our KISS strategy, Bollinger Band, MACD, RSI, and Stochastic. They all work very perfect together, but you don't have to use all of them. Let's say if you just wanted to use the Bollinger Band, I can pop that on here and look where I had a nice Bollinger Band confirmation right here. So one of my confirmations could be that I need a Bollinger Band confirmation on the lower time frame, like the 5-minute or 15-minute. Price has to be in a reversal zone. That could be my second confirmation. And maybe I have a trend line break, could be my third confirmation. You only really need a good 3 reasons as to why you would enter a trade, in my opinion. And the more, the better. The more confluence you have, the better. When I say confluence, I mean confirmations. Then good to go. Okay. So the next thing is after you have your directional bias, you are trading from key levels or a great price. You have key confirmations. The next thing that is very critical, which should be your number 1 actually, is risk management. So you got to ask yourself, if this trade goes wrong, where am I going to make up for my drawdown, or how can I come out profitable? Or if I'm trading with a small balance, where am I going to cut my losses so that I don't deplete my account? And you have to stick to that, guys. If you don't, you're not going to be a happy trader, a successful trader, or a consistently profitable trader. So you have to decide, you know, especially if you're taking signals or you're following other people and you're not yet confident taking your own trades, maybe you should consider staying in your demo account or working small and just slowly scaling your account. So if I go, for example, to this trade, and if I go to the daily and I look at, okay, if this trade goes wrong, knowing that I'm scalping, I'm looking at the reversal point. So when you're trying to really find that precise area of entry where you can find your opportunity, I always encourage our students to really pay attention to the wicks. So for example, you can see that this is a heavy wick area. Look what happened here on this daily chart several times when the price came to this zone. This is where it wicked and turned around. This is where it wicked and turned around. This daily candle here, this is where it wicked and turned around. But it was also support several times within this area. So I know that this is an area where the price could go and wick and turn around, right? So this is why I have the horizontal box here. And what you have to do is you have to find a number based on your risk tolerance where you're going to say, if it gets to this number, I'm out. Whether if that is a percentage of your account or it's a hard find number or it's a key level, you have to find something where you get yourself disciplined to say, this is what I'm going to stick to when it comes to risk management. And if you can't do that in a demo account and do it successfully, and you guys know what I'm talking about, because I used to do it. I used to have a demo, and demo and live trading are completely different. The emotions are completely different. I do think that as you get more and more experience when you move into demo just to test things out, I do think that you do become a little bit more disciplined because you're really wanting to get those results in your live account, but it's nothing like your live account. So when you're in your live, you have to decide that, okay, how can I come out of this profitably if I'm wrong? You have to always be thinking that you're playing defense, because you are. So how are you going to protect your capital when things go wrong? And if you can't really do that based on where you are right now, based on the dollar amount that you trade, you're not ready to scale upward. I would advise not to enter more money into your account. Don't keep entering money in your account, especially if you haven't proven to be disciplined with what you have right now. So decide on a number that's comfortable for you. Decide what is going to be your max stop loss or your max area, whether if it's a mental stop, a hard stop, whatever kind of stop you use, and you decide that you're going to cut your losses and go. So guys, those are the 4 tips that I recommend. Focus on the larger time frame. So you want to look out to the larger time frame so that you can make wiser decisions on the lower time frame. Number 2, you want to make sure you find your levels, your key levels of where you're going to get a great deal, whether you're buying or selling. Number 3, you want to make sure you have your confirmations. What are your 3-4 confirmations that you are going to refer to every single time to execute the trade? And number 4, your risk management, picking that level of comfort that you're comfortable with, not based on what somebody else tells you, but what you're comfortable with. So guys, I hope that these tips help. If you are a new or struggling trader, I recommend you join us at BK Forex Academy. We help get you on the right track, help you trade with structure and guidance so that you can start the right way and have a breakthrough. Do me a favor and hit the like button on this video. Also subscribe and turn on that notification bell so you don't miss the next training. I'll see you guys in the next one.